Imagine waking up one morning, opening your mail, and finding out that the government just introduced a brand new tax rule that could save you thousands of dollars. Not a scam, not a gimmick, but an official benefit designed especially for seniors. For years, many retirees have felt overlooked when it comes to real, meaningful tax relief. Social Security payments are taxed, healthcare costs rise, and even after a lifetime of paying taxes, it often feels like the system gives with one hand and takes with the other. But this time, something different has arrived. It's called the Senior Bonus Tax Deduction, and it's shaking up the 2025 tax season in a way millions of older Americans never expected. Starting now, seniors across the country can claim up to $6,000 in additional deductions per person. And for couples, that's a possible $12,000 back in their pocket. For many retirees, this new rule could mean smaller tax bills, bigger refunds, and finally, a little breathing room at a time when every dollar counts. So what exactly is this senior bonus? Think of it as an extra cushion built into your tax return. It doesn't matter whether you itemize deductions or take the standard one. This bonus stacks right on top. It's separate, it's new, and it's designed specifically for people age 65 and older. The government realized that inflation, medical bills, and fixed incomes were squeezing older Americans harder than ever. So this deduction is meant to ease that pressure, giving seniors a fairer break. And what's really special is that it's automatic. If you meet the age and income requirements, you can claim it. No complicated forms, no loopholes, no hidden fine print. Let's break it down in real life. Meet Jane, a 66-year-old retired teacher living in Ohio. Her income is modest. She gets some Social Security, a small pension, and a bit of savings interest totaling around $60,000 a year. In the past, Jane's standard deduction and a small senior allowance barely made a dent in her taxable income. But under this new rule, she gets an extra $6,000 deducted straight from her taxable income. That's on top of the normal deductions for her age group. When she does her taxes, that $6,000 lowers her total income enough to save her hundreds, possibly even over $1,000 in taxes. It's the kind of change that makes a difference when you're budgeting groceries or trying to afford new prescription glasses. Now let's look at Bob and Alice, a married couple in their late 60s. They live in Florida, both retired, with a combined income of about $180,000. They're comfortable, but they still feel the pinch of rising insurance premiums and property taxes. Under this new rule, because both spouses are over 65, they could get up to $12,000 in deductions combined. Their income is slightly above the first phase-out threshold, which means their bonus is reduced a little. They might only get about $8,000 instead of the full $12,000. Still, that's a huge help. It reduces their taxable income significantly and can lower their overall tax bill by nearly $2,000 depending on their bracket. That's real money. Maybe it pays for a short vacation or covers a big dental procedure they've been postponing. Then there's Carlos, a 70-year-old engineer still consulting part-time, pulling in around $190,000 a year. Carlos won't qualify. He's above the full phase-out limit. And that's where this rule draws a clear line. It's meant for middle-income seniors, not high earners. Once your income crosses the upper threshold, the deduction disappears. Some people see that as unfair, but the logic is that those at the top don't need as much relief as retirees on fixed incomes. For most seniors, though, especially those living on Social Security, small pensions, or modest savings, this deduction can be a big deal. Another interesting twist, and one that many people will miss, is that this deduction applies even if you itemize your taxes. That's something completely new. Normally, you can't stack a standard deduction and itemized deductions together. You have to pick one. But under this special senior bonus rule, even itemizers can add it on top of their other deductions. Imagine Diane, a 68-year-old widow who still owns her home and gives generously to charity. Because she itemizes, she used to miss out on the standard deduction perks. But now she can claim her full list of itemized deductions, mortgage interest, medical costs, donations, and still tack on that $6,000 senior bonus. It's a 1-2 punch of savings that could make a noticeable difference when tax time comes around. Of course, every good thing comes with rules and limits. To qualify, you have to be at least 65 by the end of the tax year. You must file either single, head of household, or married filing jointly. The deduction doesn't apply to those filing separately, and the benefit phases out based on income. For singles, it starts to fade after $75,000 of modified adjusted gross income and disappears completely at $175,000. For married couples, the phase-out begins at $150,000 and ends at $250,000. This structure keeps the benefit focused on middle-class seniors, those who need it most. Let's picture how this plays out for real families. In Texas, we meet Sam and Linda, both retired postal workers. Their combined income is right around the sweet spot, about $90,000 a year. They've already seen their property taxes and Medicare premiums rise sharply. When they file for 2025, they'll get their normal standard deduction of roughly $31,500 plus the senior bonus deduction of $12,000. That's a total of over $43,000 in deductions before even looking at credits or adjustments. Their taxable income drops dramatically. And when they look at their refund, they're stunned. Several hundred more than last year, despite earning about the same amount. Then there's Lena, a 73-year-old widow living in Arizona. She gets by on Social Security and a tiny annuity, about $35,000 a year in total. She's never itemized before, it's too complicated. But now with the senior bonus deduction, her taxable income shrinks so much that her Social Security benefits are almost entirely untaxed. She ends up owing nothing to the IRS. Zero. For the first time in decades, she doesn't have to send a check in April. She says it feels like getting a raise without anyone giving her one. This rule doesn't just help on paper, it helps in life. Think about it. That few hundred or even few thousand in tax savings might go toward a car repair, new hearing aids, or a long-delayed family visit. For seniors on fixed incomes, small differences mean everything. The $6,000 deduction might not sound like much to some politicians, but for retirees struggling with grocery bills that seem to double every year, it's a lifeline. Still, there's an important catch. This deduction is temporary. Right now, it's only authorized from 2025 through 2028. That means it's not permanent law yet. Lawmakers will have to decide whether to extend it or let it expire. So if you're eligible, this is the time to take advantage. Some tax experts are advising seniors to plan strategically, maybe delay certain withdrawals from retirement accounts or time conversions from traditional IAS to Roth IAS, while this deduction is in play to minimize taxes. It's one of those rare moments where good planning can pay off immediately. And let's talk about what this means in the bigger picture. Over the last decade, retirees have been squeezed harder each year. Inflation eats away at fixed pensions. Medical expenses rise faster than cost of living adjustments. Even the Social Security COLA increases haven't kept up with real-world costs. Many older Americans end up paying taxes on benefits they thought would be tax-free. And the thresholds for taxing Social Security haven't changed since the 1980s. That's where this $6,000 rule feels like a long overdue acknowledgement, a nod to the idea that seniors deserve a little more breathing room. Critics argue it's not enough, pointing out that $6,000 only saves a few hundred in taxes for most people. But supporters counter that it's about fairness and recognition. It's about saying to seniors, we see you and we know life on a fixed income isn't easy. In Congress, both sides surprisingly agreed on this measure as part of the One Big Beautiful Bill, a rare bipartisan move that combined middle-class relief with senior-focused adjustments. For once, everyone seemed to agree that helping retirees wasn't just good politics, it was common sense. Tax professionals across the country are already seeing the effects. CPA offices report that clients are shocked when they see how much their tax bill drops. One accountant in Michigan shared that a retired couple who normally owed about $800 ended up getting a refund of nearly $1,000 instead. That's an $1,800 swing. All because of the new senior bonus deduction. Financial advisors are urging retirees not to overlook it, warning that some may miss out simply because they assume they don't qualify or forget to apply it. The good news is that claiming it is simple. If you're filing electronically, most major tax software will automatically apply the senior bonus deduction once you input your birth date and income. If you're filing on paper, it's listed as a new line item in the 2025 Form 140 instructions. No extra forms, no confusing math. The IRS made this one easy, but that also means seniors who don't usually file a return might want to reconsider this year. Even if your income is low enough that you typically skip filing, it might be worth it just to capture that deduction and potentially qualify for other credits like the refundable earned income or saver's credit depending on your situation. Let's imagine Mary and George, both 71, living quietly in Oregon. They thought filing taxes wasn't worth the effort anymore. Their income is just under the filing threshold. But after hearing about the new deduction, they decide to visit a local tax aid center. A volunteer runs the numbers and discovers that because of the new bonus deduction, their taxable income drops below zero, qualifying them for a small refundable credit. Instead of owing anything, they're getting a check. It's not huge, maybe a few hundred, but it's money they didn't expect. George laughs and says, "I guess it pays to pay attention." Another powerful aspect of this deduction is how it interacts with Social Security taxation. While it doesn't directly change how Social Security benefits are taxed, lowering your taxable income can reduce the portion of benefits that count as taxable. That means the bonus deduction can have a double effect, not only lowering your tax bill but also shrinking the amount of Social Security that gets taxed in the first place. For seniors who feel like they're constantly taxed on the same income twice, that's a welcome relief. Now imagine the cumulative impact nationwide. Analysts estimate that over 30 million seniors will benefit from the new rule with average savings between $500 and $2,500 per taxpayer. That adds up to billions staying in the pockets of older Americans instead of going to Washington. Some economists see it as a small but meaningful stimulus. Extra money circulating in local communities helping small businesses and service providers that seniors rely on. But time is of the essence. Since the deduction is only authorized for 4 years, many advocacy groups are already pushing for Congress to make it permanent. AP has called it a vital adjustment that recognizes the economic realities facing older Americans. Lawmakers on both sides say they're open to extending it if the results are positive and fraud remains low. Early data suggests compliance is strong. The simplicity of the deduction helps prevent misuse. Still, not everyone will benefit equally. Seniors with higher incomes may see the deduction phased out completely. Others might not notice much difference if they already have very low taxable income. But for the millions in the middle, those who earn too much to avoid taxes entirely but too little to feel financially secure, this rule is a godsend. It bridges the gap between surviving and living comfortably. Think about what this says about the direction of tax policy. For decades, tax breaks focused heavily on working families or corporations. Retirees often got scraps, small adjustments that barely covered inflation. This senior bonus deduction changes that narrative. It treats older taxpayers as a priority, not an afterthought. It recognizes that they've contributed for a lifetime and deserve some stability. Now, whether you see it as smart policy or just overdue fairness, it's hard to deny the positive impact it's already having. So if you're a senior, the message is clear. Don't ignore this opportunity. When tax season arrives, make sure you or your preparer apply the $6,000 senior bonus deduction. Check your eligibility, especially if you're married or close to the phase-out range. And if you're helping an older family member with their taxes, make sure they're aware of it too. It's simple, legal, and incredibly beneficial. This is one of those rare moments when the system actually gives something back. Not a handout, but a well-deserved break. After decades of paying into the system, seniors finally have a rule that truly works in their favor. Maybe it won't fix everything. Healthcare will still cost too much. Groceries won't suddenly get cheaper, but it's a start. And for millions of retirees across America, that start could mean the difference between worrying about every expense and finally feeling just a little bit more secure. So as you gather your receipts, pull up your tax forms, and prepare for the 2025 season, remember this. The $6,000 senior bonus isn't just another number on a form. It's recognition of hard work, of years of contribution, and of the simple truth that retirement should come with peace of mind, not paperwork stress. This rule might be temporary, but the relief it brings could be long-lasting. For many, it's a sign that maybe, just maybe, Washington hasn't completely forgotten the people who built this country, and that's worth celebrating. Because at the end of the day, this isn't just about deductions or percentages, it's about dignity, it's about fairness. It's about seniors finally catching a break in a world that too often forgets them. And when the next tax season rolls around, millions will feel the difference. A little more money in their pockets, a little less stress in their hearts, and the satisfying feeling of knowing that for once the rules actually worked in their favor.